Good morning, Hong Kong. Welcome back to another episode of Hong Kong Insurance 101. This week, we're going to be looking at your health insurance options should you find yourself being laid off from your job. It's fair to say that 2020 has been a tumultuous year. From social unrest to the global COVID-19 pandemic, people and businesses across the world have been placed under a significant amount of stress. Unfortunately, that stress has seen widespread cost cutting from many companies, which in turn has resulted in layoffs. For many individuals who have been made redundant or who are facing the prospect of a layoff as their company looks to control their costs in light of an ongoing economic uncertainty, any health insurance that you may have is likely provided through your employer as part of a benefits package. Losing your employment means losing your benefits. And while there are other equally important employee benefits, like your MPF account, health insurance is a major concern at the present time. If you've been laid off by your employer due to the current economic climate in the face of an ongoing healthcare crisis, ensuring that you are able to receive vital and life-saving healthcare should you need it will likely be at the top of the list of things to sort out, along with rent, utilities, school payments, and other costs of living. The first place to start is with regards to whether or not your employer provided health insurance included a continuation benefit. A continuation benefit, should one exist, allows you to continue on your existing health insurance policy as an individual policyholder rather than a member of the group. As long as you continue to pay your policy premium, subject to the terms and conditions of the insurance, you are normally able to remain on the insurance. You would not be part of the group and would no longer be able to receive a medical history disregarded benefit on your coverage. But any medical conditions which were covered by the company health insurance policy may be able to receive continuing coverage under the continuation option. This does away with the issue of pre-existing conditions and means that you would not have to worry about any medical conditions being excluded from your coverage. However, you would be locked into your employer's policy, which could be expensive depending on the benefits they were offering. Continuation, remember, requires you to pay for the insurance on your own. The company will no longer cover the premium payments. So if you had a company plan that included extensive coverage benefits, low deductibles, and a large coverage area, paying the premium associated with the continuation option may not actually be sensible, especially if you have recently become unemployed. It also means that you are left with the financial burden of paying for a high level of cover with benefits you may not actually need. If you're concerned about your ability to access quality medical treatment but are wary of the price tag that comes with a continuation benefit, then a catastrophe health insurance product may be your best answer. Catastrophe health insurance is an informal moniker, but refers to an international health insurance policy with only inpatient coverage and a very high deductible. Because of these two features, the policy is basically unusable unless the policyholder experiences a life-threatening medical emergency, that is to say, a catastrophe. The high deductible, often in the region of $10,000 or more, and the fact that the policy only covers inpatient medical treatment means that the insurance will not be covering outpatient treatment, general practitioners' visits, vaccinations, maternity, psychiatry, dentistry, or any of the other extended benefits commonly available through a health insurance policy. The restriction of benefits significantly reduces the overall cost of the health insurance. The reason this reduction is increased by adding a deductible, which would exclude the policy from being used for ordinary everyday healthcare. Low-cost, low-coverage Hong Kong products may be able to provide a suitable coverage stopgap, but will not protect you should you need medical care overseas. International health insurance products are much more expensive than their Hong Kong counterparts, but will cover you overseas and can be tailored to your needs, which can also help you cut your cost exposure. No matter what you decide to do, there are options available. That's us for this week. We hope you have a happy and healthy weekend. Don't forget to like and subscribe to stay current with all our content as it comes out. And remember to ask CCW. We're simplifying your insurance.